Hello there, and welcome. Today, we're diving into a topic that's becoming a huge deal for so many of us: the real dangers of using artificial intelligence for your UK self-assessment tax return.
Now, this entire discussion has been put together by the tax experts over at ProTax Accountant. These are the people who are on the front lines, and they see the real-world impact of tax filing mistakes every single day.
So let's just get right to it. Are you thinking about using AI for your tax return this year? It might seem like a really clever shortcut, but honestly, you could be handing HMRC a penalty on a silver platter without even knowing it. So, here's what we're going to cover. First, we'll look at why AI is such a tempting shortcut. Then we'll get into something called the hallucination hazard. After that, we'll explore why UK tax is such a unique challenge and how HMRC is actually using its own AI. We'll wrap things up by talking about that missing piece, human judgment, and of course, the smart way forward for you. Okay, let's dive into this. Okay, so first things first, AI, the tempting tax shortcut. Let's be honest, you can see the appeal of automated tax filing, right? It just seems like the perfect solution. It promises to be fast, low cost, and you get this huge, complex job done with, just a few clicks.
I mean, this is the dream, isn't it? Faster processing, lower costs. It promises to automate all those tedious tasks we absolutely hate. It can classify your expenses, maybe even suggest a few deductions based on your spending patterns. For anyone who's ever stared at a shoebox full of receipts, this looks like a lifesaver. But, and this is a really big but, this is exactly where that dream can turn into a bit of a nightmare.
And that brings us to the single biggest risk, a concept they call the hallucination hazard. This isn't where an AI makes a simple typo. No, this is where it confidently invents information that looks totally plausible, incredibly detailed, and is completely and utterly wrong. That's not all. Here's where most people go wrong. So let's be really clear on what we mean by this. An AI hallucination is when the model spits out a result that sounds plausible, but it's just plain wrong. The crucial thing to understand is that the AI has absolutely no concept of reality or truth. It isn't lying to you. It's just a very sophisticated pattern matcher that's predicting what the next word should be. It's playing a game of probability, not a game of facts.
And this brilliantly illustrates the real danger here. This quote comes from a real legal case where an AI just made up fake legal cases. Now, just translate that to a tax context. Imagine you submit a return based on a deduction the AI just hallucinated. HMRC wastes its time investigating, and suddenly you're the one facing the consequences, potentially damaging your financial reputation for years.
Here's a quick and kind of funny but also pretty alarming example. Did you know a car dealership's AI chatbot once agreed to sell a £76,000 SUV for £1? Yep, just £1. It literally couldn't understand that the user was joking. Now, if an AI can make a £76,000 mistake on a car sale, just imagine the kind of errors it could make with your finances. This brings us right to the heart of the problem for us here in the UK. Our tax system isn't just a set of simple rules. It's a sprawling, nuanced minefield that is especially difficult for AI models to get right. And this number right here is about to become incredibly important for a lot of people. £50,000. If you're a sole trader or a landlord, you'll want to pay very close attention. And here's why. Starting in April of this year, 2026, making tax digital for income tax self-assessment becomes mandatory for those of you with an income over £50,000. That means fully digital records and quarterly submissions. And for those earning over £30,000, your turn comes in April 27. This mandatory digital shift makes having accurate, reliable systems more critical than ever. So let's take a real-world example, a freelance designer working in London. Okay, an AI can probably handle their standard UK invoices and basic office expenses just fine. But what about income from an overseas client? That has totally different reporting rules. Or what if they buy a new high-end laptop? That's not a simple expense. It needs a complex capital allowance calculation. And the big one? IR35. An AI cannot figure out your employment status for tax purposes. That's a judgment call that could cost you thousands if you get it wrong. These things require human interpretation, not just data processing. Stay with me. The next point might surprise you. Because here's the twist. You're not the only one looking at AI. See, HMRC is investing heavily in its own artificial intelligence, but its goal is very, very different from yours. They're using it as a powerful enforcement tool.
And if you look at HMRC's own transformation roadmap, they make it crystal clear. Their goals are all about using AI to assess taxpayer risks, send automated nudges to people they think might not be compliant, and target their investigations far more effectively. They're building a system designed specifically to hunt for errors and anomalies.
So here's a pro tip to keep in mind. HMRC is using sophisticated AI to spot mistakes. If the AI tool you're using makes a hallucination error on your tax return, that mistake will light up like a Christmas tree for HMRC's advanced system. You're essentially bringing a pea shooter to a cannon fight. This all leads us to the solution. And it isn't about ditching technology, but about understanding what it can't do. The missing piece in this whole puzzle is human judgment. That's the one thing an algorithm just cannot replicate.
So, the crucial point is this. AI is fantastic at processing huge amounts of simple data really quickly. But a professional accountant, well, they provide nuanced judgment. They help you build a forward-looking tax strategy. They are legally accountable for their advice, and they can actually defend you in an audit. And most importantly, a human expert knows the right questions to ask about your life and your business. Questions an AI wouldn't even know exist.
So, what is the safest, most effective way to prepare for your self-assessment in this new world? Let's move on and see how this all builds to a solution. All right, the smart way forward is really a hybrid approach. First, use technology as a powerful tool, not a replacement. It's brilliant for bookkeeping and organizing your data. Second, make sure you fully understand your obligations under making tax digital, especially with those deadlines racing towards us. Third, get professional advice for your strategy and for interpreting those complex scenarios. And finally, the most critical step of all, always have a human expert review and submit your final return. That way you get the best of both worlds, the efficiency of tech and the irreplaceable peace of mind that comes with human expertise. And just a quick but very important disclaimer. The information we've shared here today is for general guidance only. It shouldn't be relied upon exclusively to make any financial decisions. Tax is complex and it's personal.
Before you make any decision, you absolutely must consult a qualified expert. For advice that's tailored to your specific situation, whether it's for self-assessment or any other tax issue, you can contact the team at Pro Tax Accountant. You can reach them directly on WhatsApp or by phone at 07985 689 912 or just drop them an email at info@protaxaccountant.co.uk. So if you found this breakdown useful, please do subscribe to the YouTube channel for more expert insights. Thank you so much for watching.